Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. This is Wednesday, the 1st of March. I'm Daniel Lam, your host for the podcast. For Hong Kong investors, or indeed many overseas investors, they would be, at some stage, be involved in Hong Kong properties. Now, recently, I've been hearing clients asking about views on Hong Kong property markets again. Such questions were absent for pretty much the entire 2022, when home prices were down almost 16%, the biggest yearly drop since the Asian financial crisis in 1998. Well, our CIO team does not cover Hong Kong properties per se, but let us look at some facts and the key drivers in this podcast. The game changer for Hong Kong properties is the reopening of the border with mainland China. Buyers can now freely inspect units, and traders can make plans for business expansion. And of course, this demand from mainland China is a key plus that Hong Kong property markets enjoy over other overseas property markets. New home sales nearly doubled after the reopening on the 8th of January, compared to the previous month starting the 8th of December 2022, and overall home prices had risen by more than 1% since the start of 2023. The main headwind would be the interest rates. Because of the Hong Kong dollar peg, rises in US interest rate would put upward pressure on lenders in Hong Kong to increase their prime rate. Hence, the speed of the recovery in Hong Kong property prices would be dependent upon how much more the Fed would be hiking rates. However, it's not all passive seeing and waiting. There is room for the Hong Kong authorities to act. Well, for example, in the latest Hong Kong budget, the Hong Kong government trimmed the ad valorem stamp duty, mainly benefiting those first-time buyers for homes worth 10 million Hong Kong or below, which is roughly equivalent to 1.3 million US dollar or below. This adjustment, according to industry practitioners, was a positive surprise. And of course, further adjustment to areas such as the special stamp duty may further improve the sentiment in the Hong Kong property markets. So overall, it appears that while the road is not all in the clear, Hong Kong property prices may be forming a base in the first half of this year. And interesting opportunities may arise, for example, in the second half of 2023, when the Fed rate hikes may be coming to a pause. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.